Hello, hello everybody. You're welcome to this week's Forex Outlook for the last week of December. That's for the 19th to the 23rd. So, as always, we're going to start out with the weekly Forex Outlook. That's the technical calendar for this last week of reasonable trading. So we don't have major news coming into this week. We just have monetary policy for the yen on Tuesday, then card on Wednesday and Friday, and that's just about it. Because if you look to the next week, you have significant bank holidays throughout the whole of upper week. So that's why I said this is the last reasonable week of trading. So the next we're going to start off with, as always, we're going to start off with the dollar index. So looking at the dollar index, now we're going to start off with NASDAQ, sorry. We're going to start off with NASDAQ. So looking at NASDAQ from last week, we said it would rally, but I was thinking it would stop at this point, but it really went so far as to take out the daily fair value gap to the upside. So for this pair, since it has swept buy side liquidity, I believe we may see it move lower. It may come into this other block. So for this pair, going into this new week, if we look at it on the 4-hour time frame, we can clearly see that price has broken out of a range, this box range. I see that price has broken out of it. So most likely, you might see a rally going into the new week. But any rally on this pair is going to be an opportunity to take price lower into this area. That's what the market seems to be showing on NASDAQ. This imbalance is being filled. So there's a break to the downside. So this might retrace a bit, might see a bit of a retracement and then a continuation back to the downside on this pair. Probably into this other block to take out this or to test this. So for NASDAQ, going into the new week, that's on Monday, Tuesday, Wednesday, the possibility exists that this may rally and then move back down on the downside. So the next one we're going to be looking at is the DXY, that's the dollar index. The dollar index is, on the weekly, it's coming into buying area, that's into a bullish order block. As you can see, this down close, up close, down close candle, price has broken the low. So this is invalid. So price is now between these two down candles together, they form a bullish order block. And you can see the way price closed back near its open. So if we go into the daily time frame, the price hasn't made any new highs yet. It hasn't made any new highs yet. So if we go into the 4-hour time frame, this is what we are looking at. Depends on what price does on Monday. If we get a close above 105.24, that would be like a short-term break in market structure. Then any down move will be an opportunity for a long. But should price drop and remain above this level, then we might see a continuation to the upside. So for this pair to have a bullish move, we need either 105.24, a close above it, 4-hour or daily better, or a close above 105.82. A daily close above 105.82 will signal a short-term move, and then we might see price go for 107.19 or 107.93, 99. But for now, there is no higher low on this pair. So this may just still move back to the downside to sweep into this low, and there's a balanced price range on the weekly. Let's look at it. There's a balanced price range on the weekly. one candle passed down, one candle passed up. So, but given this long upper wick, I believe price may just retrace it and continue back to the upside. So you could just easily use a fib that's from this low to this high, then wait for price at the equilibrium or into discount. Those are areas. This is just a better option. Then if price decides to drop, then you'll be looking for long opportunities below the equilibrium or into discount. So that's it for the dollar index. The dollar index, I believe it may drop given the weekly kind of like timber. It may just drop to move higher. Because if you look at it on the 4-hour, price is at this bearish order block. Price is at this bearish order block. So if this rejects price, then we might see the correction Monday, Tuesday to the downside. Then maybe Wednesday, Thursday for a continuation back to the upside. So the next one we're going to look at is EURUSD. For now, EURUSD, if you look at it on the weekly, it rallied up into this rejection block on the weekly, and then there was a very long upper wick. If we go to the daily setup, order flow on this pair is still tilted to the upside. Order flow on it on the daily is still tilted to the upside. If we go down to the daily time frame, to the 4-hour time frame, this pair might still rally to move lower. That's the way I see it. It may rally to move lower. So for this pair, this is just basically what you may do. You pick the same thing from the high to the low. Then you just basically wait and see. Because I'm of the opinion the price may try to fill this imbalance on this timber here. This timber price may try to fill it a bit because it's a fair value gap. Price may try to fill it and then move back long. Already you can see there's a break below this level. But price is coming into the bullish order block. Price is coming into the bullish order block, and if you look at it also on the daily, price is slightly above the daily fair value gap. Let me go back my annotation and remove this fig. There's a daily fair value gap there. If you look at it, price hasn't touched it yet. So if we go down to the 4-hour, should price touch that daily fair value gap, there's a possibility we might see a bounce. Then after that bounce, if price takes out buy side liquidity above this side, then we might see a move back down to either the previous week's move or 104.43. So that's it for EURUSD. The next one we're going to look at is GBPUSD. The GBPUSD, just like I pointed out last week, this balanced price range. As you can see, price rallied heavily into it and was rejected. We go into the 4-hour time frame, into the daily time frame, sorry. Price is sitting above the daily fair value gap. That's where price is sitting now. So going into the new week, we might see a bit of a bounce here. There's an imbalance, there is a daily fair value gap between this point to this point. So price may rally to fill it. Then if price gets rejected, as long as price is below 1.2446, we might see price come into this area on the euro, on the GBPUSD. So the next one we're going to be looking at is gold. So looking at gold, let's look at what gold has on the weekly. Gold closed up on the weekly as a doji, as an indecision candle on the weekly. If we go into the daily time frame, we go into the daily time frame, there seems to be a kind of a break in market structure here. This big bullish momentum, it's another block. So price has broken it. So on the daily, we are slightly shifting to the downside. You might see a little bit move to the downside. Then if you go down to the 4-hour time frame, you can see there's a break here. although price rallied. So looking at this, if we put in an notation, there is a fair value gap here. The possibility exists that price may rally, but as long as 118.24 high remains on price, this may still move back to the downside to sweep either this low or this low here. Because if you look at price, this is the dealing range for now, this high to this low. So that's it on gold. Gold can move in any direction for now, but I believe it may rally first, then move back down for sell side liquidity sweep. The next one we're going to look at is EURGBP. Just like I pointed out in the last two trading sessions, the refusal to close below 85.66 on this pair points that we might see a rally on this pair, and that has basically happened. So if we go to the daily time frame, although Friday closed up as a bearish kind of candle formation, there is the high possibility that this might just be a retracement. As you can see, we have a break above all these highs. It might just be a retracement for a continuation back to the upside on price. So we might just see a retracement to fill this imbalance, then before price continues back to the upside. That's for EURGBP. EURGBP has a bullish undertone. The next one we're going to look at is the GBPCHF. So looking at the GBPCHF, we can see that price has failed this kind of like a pin bar, but it's a very shorter block, has rejected price several. If we go into the daily setup, you can see that price dropped off on Thursday, rallied up a bit on Friday. But if we go to the 4-hour time frame, other flow on this pair is to the downside. This range price has broken out of it. Yes, this is the range. This up candle, as you can see, price has broken out of it. So on the 4-hour, the other flow has shifted to the downside. So for the GBPCHF, any rally on this pair might be an opportunity for a sell-off. So if we put in our annotations, this is what we have. So we have a big daily fair value gap. Price may try to fill it up, and if it gets rejected, that as long as price stays below 1.1547, the might see price move down a bit. Because we have a consolidation, expansion, we're going to have another consolidation before a steeper drop to the downside. So that's what we have on GBPCHF. So the next we are going to look at is the pound yen, but like I've always said, let's start off with the yen basket. Just like I pointed out last week, I said if price comes into this fair value gap on the weekly, there's a possibility we're going to see a bounce because we have a bullish setup on the yen currency pair. Let me point it out. We have this, we have this, we have this, and we have this. So we already have a bullish kind of setup on this pair. We have this low to this high, we have this, then we have this. So that's what we have on this pair. So if we go for the yen basket, if we move up to the daily, remember I said last week that there's a fair value gap to this point. It's a bullish order block. It's very important because this was the last order block before they broke this high. And if you see, price did not close below the 50% of that candle. They kept staying above the 50% of it. They didn't close heavy below it and they've gone back to the upside. So going into this new week, we might see yen strength. We might see a little bit of yen strength going into the new week. But if you look at it on the 4-hour, it's kind of like at the top of the range. So if this on Monday doesn't pick out this buy side liquidity and drop, then that means it's going to retrace a bit, then move higher. But if it picks up first, then that means it may try to come up here before dropping. But price is close to the top of this range. So we'll wait and see what it does on Monday. What happens on Monday will be a decider. If they drop without picking buy side liquidity, then that means they will still come back up. But if they pick buy side liquidity first, then that means they may rally and then Thursday, Friday start to drop. So with that knowledge, if we move into the GBP pound yen, you can see that basically this pair is just in a very big range. We already have a shift in market structure to the downside here. So this might just rally. It might just rally and then continue to the downside. So that's just what I see on this pair. If you look at it, it's in a very big consolidation. It's in a big consolidation. So this might just rally because it's sitting above a daily fair value gap. Let's go to the daily time frame. It's sitting just at the daily fair value gap. So this might cause a little bit of a retracement before a continuation back to the downside. We already have a break in market structure, so there might be a correction below 169.28 and this will still move lower. So that settles it for this week. I wish everybody a blessed and beautiful trading week and a happy and a prosperous Christmas in advance. Thank you all for listening.